The LNG industry has kind of evolved in very interesting ways over the last 20 years. So what we've seen actually over the last 10 years or so is a kind of resurgence of the upstream majors, the oil and gas majors, Shell, BP, ExxonMobil, etc., who I think for quite a while have been trying to increase their supply of LNG at the same time as accessing quite a number of markets. And of course what that's resulted in is that each of them now have a network or web of supply sources and demand country destination markets all over the world, so really a web. What they've then done is to move their trading capabilities in other commodities and pipeline gas into this space, and by kind of applying advanced mathematical option theory, they have created portfolios which they use these mathematical tools to assess risk and come up with kind of a risk value. So this is a very different perspective from the kind of traditional A to B oil index contract between maybe a smaller company relying on bank finance and a blue chip buyer with a long-term contract. So I really think this is going to come to the fore in the next LNG wave of the mid-2020s because these portfolio players, these large companies, will have the comparative advantage of being able to raise finance against their balance sheet, so a lot cheaper than non-recourse finance from banks, and I think this will allow them to pull away and get after the first projects in the next wave, and ultimately the kind of reverse of that is that if the smaller players and their banks particularly don't get with this program, they're going to be left on the starting blocks for the next LNG wave.